What kind of high-risk loans are we talking about here?
Well, these are structured loans. About a quarter of these loans to these very wealthy Asian clients were structured and complex, and they were inherited by UBS in the merger with Credit Suisse. Now, sources tell Bloomberg that UBS wants to neutralize the risk to its profitability and reputation, and so it's been scrutinizing the approximately $86 billion book of loans made to rich clients globally. Sources say they've keyed in on these loans to the APAC clients. They say the bank intends to either wind down or sell off most of the Credit Suisse more complex and higher risk structured loans in that region. And then they say these riskier assets are to be placed in a so-called non-core unit for businesses that UBS, according to the sources, no longer wants. Now, about a quarter of Credit Suisse's lending portfolio is in its global wealth business, structured in nature. Half of the book consists of lower risk, plain vanilla Lombard loans that UBS is said to want to keep. And it's important to point out that prior to the UBS takeover, Credit Suisse had pursued a decade-long push into Southeast Asia, where it lent to billionaire business families. And that helped make Credit Suisse the go-to foreign bank for entrepreneurs, something UBS saw as a plus. But the sources tell us that the CS client list in the Asia-Pacific region also includes some clients and structures of loans, which include both individuals and the companies together, that UBS may not want to do business with now. We're told we're going to hear more about this in their earnings call.
Well, all of this is happening. In fact, we have seen UBS facing an exodus of Credit Suisse top wealth managers? What's going on?
Our sources tell us that at least 6 high-level wealth managers from the Credit Suisse side in Hong Kong have now left the merged unit. This was not entirely unexpected. It was just earlier this month that Credit Suisse, the wealth staff was told to dust off their resumes ahead of the selection of new managers. It is typical in situations like this that the first to leave are the most valued. The sources say this latest round of exits does include prominent individuals such as Martin Lowe, a market group head for China, and Joe Lau. He is a 16-year Credit Suisse veteran and a team leader on the Greater China private banking team. So again, this is part of the merger situation, but it also shows that some of the talent at Credit Suisse also leaving as the dust clears in the merger and takeover.